Good afternoon or good morning, and thank you for attending our webinar series today on Precious Metals Investing 101. My name is Scott Maurer. I am the host of the webinar today. I'm the Director of Business Development here at Advanta IRA. I've been here for a number of years now, going almost close to 16 years that I've been with Advanta IRA. And I'm excited today to bring you a great guest speaker on a very timely topic, I think, as we talk here in early 2022 and in the different markets and in what's going on in our world and in our economy. Our speaker today is going to be hitting those points very specifically to what's going on. Now, for anyone who's listening to this webinar live, you have the ability to ask questions of either myself or of our guest presenter by just simply typing your questions into the question box on your screen. So get those typed into that box as we go through the presentation today. I'll make sure to get those questions asked of our presenter or get them answered myself. If you have any questions relating to self-directed IRAs specifically, you're always welcome to reach out to me. My contact information is here on this slide. Please don't hesitate to reach out with any questions you have, either on the contents of today's webinar or maybe just about self-direction in general. Our very quick disclaimer, we do not provide investment advice or tax or legal advice at Advanta IRA, and we don't endorse any particular products or companies. The webinars, the events that we host are for educational purposes only, and anyone viewing them and looking to make an investment with their self-directed IRA is encouraged to consult with your own advisors, your own attorneys, accountants, before entering into a specific investment. We can certainly point you in the direction, though, of resources, of professionals in different fields if you need some guidance. We just can't give you that guidance directly ourselves. Just a little bit about Advanta IRA for those people who are unfamiliar with what we do. We are a self-directed IRA administrator. We've been around for almost 20 years in the industry. We have over $2 billion in assets under management that we hold on behalf of our clients and their retirement accounts. And we really set ourselves apart in our industry really in two ways. One is with our customer service experience. We appoint every new account to a personal account manager, one individual here at Advanta that will be your point of contact for anything you need regarding your account, whether that's making a contribution, establishing a new account, or simply making an investment into precious metals or other assets that you can hold in your portfolio. The other area where we set ourselves apart is really our educational offerings. Today's webinar is just another extension of what we do here at Advanta to help people understand the ins and outs of not only self-directed IRAs, but the investments that people look to make and place inside of their retirement account. We do this through a variety of webinars, networking events, lunch and learn seminars. We have an event called Pitch, Promote, and Prosper, where it's an online networking forum we do once a month on a Friday. And we also record all of our webinars. And today's webinar, for those listening live, if you want to go back and watch it again, it'll be placed on our on-demand channel on YouTube. And certainly those of you who are listening to a recording can go to YouTube as well for any additional offerings from something you may have missed. Now, when we talk today, we're going to be talking about investing in precious metals, kind of in general, but just knowing obviously you can do that within a self-directed plan. And the types of monies and plans that can be self-directed include any type of IRA, whether it's a traditional or Roth IRA, a SEP IRA, or a simple IRA. We also offer solo 401k plans. The former employer plans, those old 401ks, 403bs, those can also be rolled over. We even offer health savings and education savings accounts as well. And all of these accounts, if you're interested in buying precious metals and investing in gold and silver and the things we're going to talk about today, you can use money from any of these types of accounts to make that specific investment into gold, silver, and other types of precious metals that are allowed by the IRS to hold within your retirement account. Now, the types of precious metals investing, and we're going to be talking more specifically about actual physical metals, but some of the different things you can do within an IRA, right? If you wanted to invest in precious metals, you could buy actual physical coins that are minted by a government agency. Whether it's gold, silver, American Eagles, Canadian Maple Leafs. You can also invest in exchange traded funds or ETFs that are tied to the precious metals markets. There are some companies that sell paper gold and gold certificates, basically, where individuals are, you're not buying the actual metal itself. You're simply buying metal from a company and they issue you a certificate and say you have a certain amount of that precious metals in your account. And certainly you can buy bullion and gold and silver bars as well. Now, when it comes again specifically to the IRS requirements, some metals don't meet the IRS defined fineness requirements. So the IRS, to invest in precious metals through your IRA, typically the metals need to be at least 99.5% pure gold, pure silver, in order to be eligible to be held inside of an IRA account. Just because the coin was minted, say by a government, does not automatically make it qualified for an IRA. There are a lot of governments around the world that do mint their own coins. Not all of them are going to qualify underneath the IRS guidelines for investing and holding those inside of your IRA. So if you're ever curious on exactly what metals those may be, we can certainly give you those resources or point you in the direction of the IRS website where you can get a list of which countries, for instance, you can buy metals from. Additionally, IRS rules stipulate that the IRA owner should not have any physical possession of the IRA-owned precious metals. So our clients who have purchased precious metals in their IRA also establish separate storage accounts where the physical metals are held. The IRS rules do not permit you to hold on to those metals personally. And using a single member LLC does not get around this requirement. There was actually a court case very recently called McNulty v. Commissioner, where an IRA owner tried to get around the physical possession issue by creating an LLC for the IRA to invest through. And as the LLC manager, they physically held the metals, and they felt, and probably got some bad advice, and felt that that would be a solution to their issue of not being able to physically hold the metals. But that court case ruled that that taxpayer had violated the rules regarding IRA accounts, and specifically in how you can invest in precious metals. One kind of other little note, although precious metal coins can be legal currency, right? You could actually use those as currency if you choose. You cannot use metals as a contribution to your IRA. So if you wanted to invest or hold precious metals in your IRA account, you must make or use cash in your IRA. So you can make a contribution to the IRA of actual cash and then have the IRA buy the metals. You can't simply take metals that you already own and use them as a basis for contributing directly to your IRA account. So that's a little bit of the background here on precious metals within an IRA account. Certainly go into more detail or answer any additional questions you have regarding that topic. But what I did want to do is give plenty of time today for our presenter, who is, actually, let me switch the screen here one moment, give you a little introduction. It's Joe Allen is joining us today. He is the president of Allen House Metals, based here in Florida. Allen House Metals offers purchase, sale, and storage solutions. He has worked in the financial industry for over 25 years and is a frequent speaker on owning precious metals. Again, whether it's inside or outside an IRA account, today Joe's information you can take to use on a personal basis. Again, if you want to make that investment using your IRA account, I can certainly assist you at Advanta IRA in getting that done. But at this time, I'm going to bring Joe on. Allow him to show his screen, and certainly maybe he can give you some more information on what they do at Allen House Metals and give you a little bit more information on his background as well. So Joe, how are you doing today?
I'm doing really well, thanks, Scott. Can you see my screen all right?
Yeah, I can see the screen just perfectly. So before you go forward with those slides and introduce yourself a little bit further, again, just want to remind everyone who's listening, any questions you have on anything that I've talked about already or that Joe talks about in his part of the presentation, just type that question into the question box. We'll make sure we get to it. We'll probably have a few minutes at the end as well to get some of those answered. So at this point, Joe, the floor is yours, and I look forward to the presentation.
All right, thank you, Scott. And on behalf of Allen House Metals and all of us here, I'd like to again thank you for having me on. And without further ado, of course, today's topic is considerations for investing in precious metals. The main consideration that we find investors have is diversification. Diversification at any time. Investors that speak to us are concerned about what might happen to their savings if the U.S. dollar or the stock or bond markets or real estate markets were to suffer major corrections. It's something that's on everybody's mind today. Precious metals can help you keep your portfolio balanced and tangible, right? They can ensure the peace of mind that only a physical investment can, that you retain full ownership over. They are a proven tool for preserving purchasing power. Um, Not only that, but as the US dollar has declined by, for instance, 10% in value over the last, say, 18 months, consider that over that period of time, silver prices have doubled. Gold is up almost 40%. The precious metals are and can be an ideal hedge during times of economic turbulence or other risks to wealth building. Um, Again, if you think of where we are right now, um, these are prudent considerations. If we look to this second slide, I hope everybody can see, um, what does a diversified portfolio look like? Well, a diversified portfolio, we believe, typically is going to have about 25% uh, invested in precious metals. And again, these are just considerations. Ultimately, you need to decide what is the best fit for you. However, we feel that a rebalanced portfolio could adequately offset risk in other markets with 25% precious metals. You can obviously, if we look over to the second pie chart, an aggressive investor might consider 10% in precious metals. However, an aggressive investor, by definition, is an investor that we would speak to, for instance, with multiple income streams, 4 or more income streams. Ray Dalio is a perfect example of he's a multi-billionaire. I think his net worth is approximately $20 billion. Ray Dalio is the founder of Bridgewater and Associates. Many of you may know Bridgewater and Associates is the world's largest hedge fund. So the founder of the world's largest hedge fund has his $20 billion net worth. He's got 7.5% tied up in precious metals. These are just considerations that you might want to have. We find investors are looking for a true safe haven. Let's face it, gold and silver haven't traditionally been big money makers. What they're looking for is a safe haven. Precious metals serve as an insurance policy on your wealth. You have insurance on your home or your car. Why not have insurance on your financial health, right? Precious metals can provide a healthy balance to a diversified portfolio. I might suggest precious metals are by definition the safest, most conservative move that you could make. They can offset large portfolio declines, particularly when paper markets decline. Traditionally, gold is the most popular safe haven asset in times of turmoil or financial calamity. It's the ultimate, what we consider to be the ultimate crisis commodity. Moving on, one of the biggest considerations that an investor needs to have when you're considering investing in precious metals is the supply and demand imbalance. Silver and gold mining production has been declining steadily for years. New exploration has plunged by as much as 85%. Much of the shortfall is being made up by reserves, which are now falling to the lowest level that we've ever seen in years. Supply is falling. Government supplies continue to fall, even though they're net purchases of precious metals. Currently, silver faces a 7 million ounce deficit for the first time since 2015. A note about silver. Silver is by far, the long-term outlook for silver is by far and away the greatest of all the precious metals, and this is due to a very basic financial concept: supply and demand. A stronger physical demand is combined right now with a dwindling above ground supply. Silver's poised for an incredible long-term investment. In fact, a question and a consideration for any investor looking at gold, silver, platinum, and palladium is if supplies of silver continue to fall and demand continues to increase, what do you think is going to happen to the price of silver?
Joe, quick question for you on that. On the if you can go back to that slide.
Sure.
You mentioned kind of the exploration has really declined steadily, or actually, I guess, plunged, and the production has been declining. Is there a particular reason? Is it the fact that these are finite resources, or is it simply just not the infrastructure in place to really, or people, is there a reason why people are getting out of that business? Just curious.
The short answer is miners haven't been really spending money on exploration. They have had reserves that have buttressed the above ground supply, the ready availability of recycled gold and silver. Think about it this way: if you're running a business, miners typically don't run businesses the way we do. If you're running a business and you're a miner, why would you spend money in exploration, which is prohibitively expensive, if you have reserves that meet the demand? The problem then is as soon as you run up against a wall and you can no longer meet the demand, you haven't been exploring for new supply. So this whole process takes time. um, it's the supply and demand imbalance is one that's going to take years to resolve. But the short answer is because miners don't spend money prohibitively expensive exploration unless they have to. They make up the shortfall with reserves, and I'm about to show um, a perfect example of that. Actually, is on the next slide. um,
Okay. Well, yeah. Thanks
we
for the answer. Like I said, I think that was yeah. But yeah, anyone else has a question, please make we get him. I'm sorry to interrupt. Go ahead.
No, not at all. I really appreciate that, and please, uh, if you have a question, don't hesitate to interrupt me and ask me. So, and further to what you were just, asking me, Scott, this is supply and demand statistics. We're looking at supply of gold. Now, I'm just going to roughly follow the gold price up here for folks, just so you can see where we are. And really, what I want to point out is the green represents recycled gold. Look at how much of the supply is being met with recycled gold. So what happens when supplies start to fall is naturally they have a hard time meeting demand. Um, this is an important note. The other thing that I want to point out, and this is really significant, I believe very significant. What the maroon color represents is net hedging, net producer hedging. Just a quick moment. Consider this. Producers of precious metals, they know where the market's moving. They're producing precious metals. When we see producers hedging, look at the price moves. Now, I'll point out, do you see producers hedging along the bottom? You don't. But you sure see producers hedging down here. Again, producers hedging. I'm going to point out that you see producers hedging again down here. So producers hedging, and again, pardon me, my arrows aren't working very well, but you get the general idea. Where there's producers, there's net hedging, you see an uptick in price. And let's move to the next. And we're going to come back to a chart that's going to discuss demand as well. We'll come back to that. But it's worth noting right now, central banks, when we consider demand, central banks are net buyers of precious metals. How much? The Federal Reserve, I believe it's approximately almost 6%. Think about that. If you had 5% of a public company, I mean, you're declaring positions. Physical demand has absolutely exploded since the 2008 financial crisis. And in particular, we've seen the demand increase exponentially since March of 2020. Not only that, the sophistication level of the investor has increased along with it. This is kind of scary. Some mints have decided to ration sales of silver due to unprecedented demand. I will give you an ongoing example. In February of 2021, the United States Mint announced that it would begin to ration sales of silver coins. They said this after, quote, continued exceptional market demand. How much? Well, the market grew by 24% in 24 months. We're talking just coin, by the way, which we don't even consider an investment. Coins really are a hedge. But the market's exploded, suffice it to say, and it's concerning that mints, not only worldwide, but our own mint would take steps to actually ration sales. The deficit in supply, it's really simple. The deficit in supply coupled with investor demand is really expected to drive precious metals prices further. This next slide is a perfect example. If we look at the demand, again, side of things, what we see, and I want to point out, is investment demand. And by the way, investment demand is as banks, brokers, it's not just individual investors. As individual investors, we make up a very small pool of the greater investment community. But what I do want to point out is that investment demand is greatest, let's look at it here, and investment demand is the green. Investment demand is the greatest when we see prices on the increase. Again, investor demand is the greatest when we see prices on the increase. We see low investment demand down here. Now, with this one exception, I wanted to make a note, is investor demand is significant here. Silver had a $5 or $6 move at this time. You don't see it because we're looking at gold, which is really the barometer. Okay, so supply and demand, it's really very simple. Investor demand can tend to drive the market, particularly where we look at gold. The gold to silver ratio, this is the easiest way for an investor to value silver in terms of gold, whether or not silver's undervalued or not. And so I'd like to speak to that for a second. Really easy to figure out what the gold to silver ratio is, by the way, but let's look at a couple of salient points. So historically, when the ratio has been 80-1, it's been an amazing time to see significant gains in precious metals, silver specifically. Some experts believe that the ratio, the gold to silver ratio, is going to collapse to 14-1. 80-1 is significant gains historically. The average has been 45-1. I'm going to show you a chart again. Average has been 45-1. A low ratio typically favors gold. So what I'm going to do is I'm going to put this chart up, and we're going to look at, so I'm going to suggest, we're over here. I'm going to suggest that the average, again, along here is going to be, say, 45. So gold has charged. Gold's been charging up. So let's just take 18. Get your calculator out. Get your calculator out real quick. $1,800. I'm going to divide $1,800 by, say, 2250. What do you get? 80-1. Now that's today. All right. If you take the price of gold today, $1,800, approximately, I know it's higher, a little bit, and you take the price of silver today, approximately $22.50, and you divide that into the price of gold, you've got 80-1. This is historically the best time to buy silver. Now, why is silver undervalued? Of course, gold made a $700 jump over a period of 18 months, but at 45-1, what if gold were to stay at $1,800 at 45-1? Silver could be trading potentially. We could see $40. This is just based on the ratio. Don't forget that value is found in silver because it's cheaper and it's tied to industrial demand. 57% of it's tied to industrial demand. So we've got 80-1, perfect timing. At 45-1, you've got the historical average over, in the last 100 years. At 45-1, you're looking at potentially $40 silver. I'm simply saying what the ratio indicates. Folks are saying it could fall to 20. Look at this. This is 20. Folks are saying it could fall to 20. Why? Well, because of what's happening to the value of the dollar. But if we look at 20, very simple. At $1,800 gold, potentially $90 silver. Numbers are getting big. I want to point something out, and I want to do this on an ensuing chart regarding the price of gold. But essentially, of course, if we assume that the prices of gold stay where they are or are trading within a range, it gives you an idea of where value can be found in silver. Silver is extremely undervalued right now. The US dollars, of course, and precious metals are often share an inverse relationship. What does this mean? Well, what it means is, of course, as the value of our dollar increases, the value of physical tangible things tend to decrease in value. The opposite is also true. When the value of the US dollar decreases in value, gold and silver increase. So they share, it kind of works like a seesaw, or a seesaw, I beg your pardon. The dollar and metal share an inverse relationship. In fact, since 2001, most of the price fluctuations have been dollar related. When the US dollar loses value, investors look for alternative places to store value. I really think this deserves a slide on its own, but this is something I hear from investors every single day in one shape or form. When their savings lose value, when the dollar loses value, they start to look around for alternate places to store that value, and gold and silver are proven ways to protect assets and preserve purchasing power. In fact, well, since 1913, gold and silver buy all the same goods and services today that they did in 1913. Consider that. Gold and silver buy all the same goods and services today they did over 100 years ago, and I suggest they will buy all the same goods and services 100 years from now. Well, let's look at what's happened. On this slide, it's pretty self-explanatory. This is just since 1970. We're not talking back when, this doesn't even go back as far as I go back. If we look at what the dollar has done since 1970 alone, look at what the price of gold has done. When a dollar buys 5% of what it used to, it's hard to think $1 million is rich anymore. This is what's most, I think, important here. What's this? This is what's called a cup. And that's a handle. That's 1,000, excuse my writing, that's a $1,000 cup in gold. So if gold's at $1,800, I'm simply saying this is what the chart says, but obviously I'm not going to write it out because I look foolish, but that's a $1,000 cup. A cup and handle is a tool analysts will use to measure the future price of something. The depth of the cup coincides with the length of the handle. Here we have $1,000 depth. And if you add that to where gold is at $1,800, it suggests that gold could move up considerably. Moving on to the next slide. Again, we look at the dollar has lost since 1913, 96% of its value. If we look to and I want to get to a couple of charts, but quickly, protecting your assets and preserving your purchasing power should be a major consideration when you're investing in precious metals. Inflation has reared its ugly head. The numbers out yesterday, by the way, the Fed uses the CPI numbers, which were out yesterday at 7%, as really a barometer of inflation. We haven't seen numbers like this in 40 years, all right? The Fed indicates it wants to run at 2 to 2.5%. Well, it's hard to see with inflation pushing 8 how they get it back to 2.5 in the next 18 months. Like, for people to think that the Fed can get inflation from 8 down to 2.5 in the next year or so, it's been that long since March of 2020, and look where we are. Typically, precious metals prices rise over time with the cost of living. What's that? Inflation. During high inflationary periods, what happens typically? Well, typically stocks plunge and metals rise. Deflation, this is a concern. You hear things like stagflation, right? Deflation can be even more serious than inflation economically. Precious metals tend to soar in value when other when other prices drop. What about the direct correlation between rising political economic tensions and uncertainty? COVID, right? Look at what's happening. And it's real. It's not a supply chain crises aren't a figment of anybody's imagination. These are real problems. Let's look at, I have a picture of this on my wall because it is a multi-decade cup and handle. It is, I believe, the largest cup and handle in any type of commodity or security. This is silver prices, folks, and it starts all the way back here in 79.80. Anybody remember 79.80? By the way, mental note, in 1979 and 80, when inflation was at its highest, yesterday's numbers took us back to 82, okay? But in 79 and 80, when inflation was at its highest, and we tend to think this is what's coming, interest rates, if you'll recall, were what? Not 16, not 18. They actually, I think they rang a bell at 20. Correct me if I'm wrong. I think they went to 20. So don't be afraid. The Fed's got to ratchet up interest rates a little bit. The long term for gold and silver is fantastic. Again, if we look at the cup here, first of all, what should become clear is silver's hit $50 twice in the last 50 years. Don't think it doesn't happen. If we look at the cup, I suggest it's, approximately $40. I'll get better at this, I promise. I suggest that's approximately $40. If we see the beginning of the handle down at $11, $12 in March of 2020, okay, there's the $40 handle. This is even nicer, I think, because this shows everybody what's coming right now. This is a $10 cup and handle right now. This is imminent in the market for silver. This is a $10 cup and handle. So silver prices, this is the world's largest multi-decade cup and handle. Silver prices have hit $50 twice, 1979 and 80, 2011. Look at what printing money does. This is 2009 through 2011. By the way, the Fed didn't slow down. The Fed didn't take 2 years to print that kind of money. The Fed's printed even more money in less time. How much? We've printed 40% of all of the paper money. Statistically, in the history of our country, we've printed 40% of the paper money since March of 2020. If we look at midterm silver, again, what I want to point out is this is what printing can do. This also gives us a very nice view. I'm sorry if I point it out again. It gives us a very nice view of, I'll even give that to you. That's only $10. But that gives us a very nice view of what we could see happen. Remember, gold and silver markets are real markets. Just because they tend to hold value and increase in value over time with the cost of living, nothing goes up in a straight line. A couple steps forward, a half a step back. We are in a secular bull market. Officially, gold and silver have reversed to long. I will say that even on the paper side, officially, gold and silver have reversed to long now. We're not short on the paper side. Proven tools for wealth preservation. Precious metals will typically outperform other investments whenever there is global unrest. What are we looking for? People that call in are looking for safety. They're looking for protection. There's no credit risks in gold or silver. There's no risk that there's going to be a disruption to a payment you're receiving or a debtor that defaults. Equity in a company can go to zilch. Not going to happen with gold and silver. ETFs, futures, options, stocks, mutual funds, all of these paper investments face greater risks than physical metals stored in an independent depository. And that's just a fact. This slide just takes a moment to consider. This is produced by CMP Group, and they trade futures contracts. And they've done study after study after study of what they feel is an optimal diversified portfolio. This has to be viewed risk is the risk that you're going to lose out on gains in the stock market. This is not risk you're going to lose money. This is risk that you will lose in gains in the S&P 500 in the stock market. This is the return that you receive. It's been suggested that 25% to 30% is north of 8% return, and it also allows you the least amount of downside risk that you're going to miss out on these other returns. So the least amount of downside risk that you would lose out on returns in other markets, but the maximum amount of protection in your portfolio. Look at what happens. It's not that you're at risk of losing money. There's no risk of losing money if you increase the percentage of your portfolio in precious metals. But the risk that you're going to lose gains in other markets does potentially increase. All right. Now, I might sound like I'm selling my way out of selling gold and silver instead of into it. I would suggest these are considerations for investing in precious metals. The key to success, as everybody on the call knows, is diversification. There's nothing wrong with having more of your investment dollars in gold and silver. Frankly, I can think of a number of investors with very large holdings that are entirely in gold. There's nothing wrong with that at all. If you were going to lock it down and protect it, you could do that. These are folks, for instance, that maybe at or near retirement age, I'm not suggesting, but at or near retirement age, perhaps older, is there anything wrong with protecting assets, preserving purchasing power? Of course not. But what this chart is designed to show you is it potentially could be a fit to have 25% of your portfolio in precious metals. You still have the potential to see all those extra returns, and you don't lose out on the returns in the market. And let's face it, right now, gold and silver are a very good buy. We work exclusively with Dillon Gage. Dillon Gage is an authorized purchaser and distributor for the United States Mint. Dillon Gage owns the storage facility that Advanta uses to store clients' metal. All right, so that makes things very handy. We receive your order and we literally walk it over to the vault. There's no shipment required because Dillon Gage is a distributor for the United States Mint, and because they own the storage facility and Advanta uses it, we literally will walk the metal over to your account. It allows us to charge the lowest storage fees in the entire business. Consider this for anybody out there who's storing metal, either in a storage account or in an IRA. How much are you paying? I know it's not as low as this because nobody can get storage lower than this. So that's a big consideration. 10 basis points, that means you can store $1 million in physical precious metal, which you retain full ownership over, $1 million for just $1,000. You can put $100,000 worth of metal in an Advanta IRA account today, and you could do it for $100. So nobody's going to beat Advanta IRA when it comes to storage costs. If you call our number, 561-284-6443, and if you reference the Advanta IRA webinar, you're going to receive a discount on your next purchase. And I want to thank you, Scott, for having me today. And I'd really like to open up the floor. If there's any questions, please, I'd love to hear them.
Yeah, sure. Thanks, Joe, for the presentation. We definitely had a few questions come in. Since we're kind of just talking just now about the process, we had a couple questions from one individual ask. First question: is there a minimum dollar amount to purchase? Do you, I guess, have a minimum amount specifically that you want to see to actually have a purchase?
No, we don't. I would actually answer that question with another question, which I know nobody likes, but what's a comfortable amount for you to get started with? That's the amount that we'd like you to get started with.
Okay. Someone asked, can you hold physical gold if it's not in your IRA? And the answer is absolutely. You can certainly, if you buy precious metals on an individual basis, you absolutely can hold those in, personally in your own safe. It's only the IRS rules regarding IRA purchases that prohibit physical possession if your IRA is the purchaser. And
Correct.
the other question, another question maybe you could help here with Joe is someone says, how do you sell if you are holding the metal in the IRA storage account? So maybe walk through a sale. How would the sales process work on your end? If someone says, hey, I want to sell the gold that's in my IRA account or silver, how does that work on your end?
First of all, you're 100% liquid at all times. So within your storage account, and that's within the storage account, of course, you're always going to be able to review the account, get real-time quotes, complete transactions within that account. And what that literally means is you can move out of metal into cash and cash back into metal. We always buy back, and thank you for asking, Scott. We buy all of the metal that we sell back at spot price for the commodity, and I want to make that distinction. We deal in an exclusive product, and so it's not a piece of paper. Spot price for March silver is a futures contract. The spot price for the commodity that you purchase from us is going to be much higher than that, whether it be gold, platinum, silver, palladium. So we're going to guarantee spot price for the commodity, and you're going to be able to move out of metal into cash instantly. And again, with you, Scott, over at Advanta, it's as simple as a one-pager, and you could submit the form online, and you can go into cash. You don't need to worry about picking up the phone and trying to get a hold of somebody. Everything's automated. Everything is fully automated online, and you can make real-time transactions.
Okay, a
And we
couple more.
typically settle.
No, go ahead.
I was just going to add, because it's, people will ask the question, so fine, I'm 100% liquid, I can move out of metal into cash. When do you settle? We typically settle next day. And again, the reason it's so easy is we're not shipping the metal anywhere. You don't have to ship it back to us. We don't ship it to you. It's already there. You're 100% liquid. If you move out of metal into cash this afternoon, the money's in your account tomorrow.
All right, good. Some other questions on process. I'll take this first one. Someone says, how do you buy if you are checkbook control? So that's a strategy within the IRA world of people using their own LLC where they have their IRA funds in. The question is, does a checkbook can buy it, or does it have to go back to Advanta and Advanta buys it? The answer is that you could purchase the metals directly through the LLC that you own. You just can't store them. So you do not have to send the cash back to Advanta and have Advanta make the purchase. You could buy directly with your LLC, but your LLC would need to set up a storage account to make that happen. Another question someone asked, and for you, Joe, can the purchaser of gold and silver have access to the storage unit if requested to view it?
That's a very good question, and I'm inclined to say yes. And I believe the only limitations might be physically. For instance, obviously, you need to get yourself to the facility, and it have to be arranged. But there's no reason why you can't show up. In fact, if a customer wanted delivery of the metal, we've got to go in and ship it out, right? So yes, would be the answer to the question. We'd have to make it happen.
Okay, another question, someone says, can you take distribution from IRA from storage account to actual physical? The answer to that is you can. So some people will sell the metals and then take a distribution of the cash. If you wanted to take the actual gold or silver personally as a distribution from your IRA, you would just instruct Advanta at this point. We would reach out to either Allen House or to IDS and say, hey, we need that this client wants these particular coins, these particular bars sent to them, and have those metals then shipped to you as an individual and have it be a distribution from your IRA. So you are permitted to do that. It's just going to be taxable to you. If you take it out of the IRA account, it's going to be taxed at whatever that day's gold or silver price is. So that certainly is possible to do. Another question, Joe, for you, someone asked, what other metals? I mean, we've talked pretty much gold and silver. Are there other metals that you offer for sale at Allen House, whether it's IRA related or not?
So first of all, and thank you, that's an excellent question. We offer all precious metals products that the distributor for the mint will sell. I focus primarily on gold and silver simply with the greater economic climate in mind and the safety and security aspect. Platinum and palladium are also very popular. I think palladium is not traded. There's no volume in palladium It would be call us to talk about it. We can obviously get if you want palladium, we'll give you palladium. Platinum, thinly traded. I don't feel platinum I don't feel volumes is strong enough. Again, a consideration is safety and security, liquidity. Platinum prices, platinum tends to be thinly traded as well as palladium. So call us and inquire. Any product that the distributor for the United States Mint will produce, we bring to market. If you don't see it on our website, that's simply because we're mainly interested in the most negotiable products. Products that aren't necessarily negotiable or as liquid, like platinum and palladium, we typically don't highlight.
Okay, thanks, Joe, for that. And question, I mean, it's kind of, I'm not sure if you'll be able to answer this, but someone did ask, can you talk about precious metals versus, Bitcoin or other types of crypto? I didn't know. I mean, obviously people investing in I think both of these asset classes
Mm-hmm.
you're doing so probably as hedges against the dollar and inflation and things of that nature.
Mm-hmm.
But I don't know, did you have any thoughts you could share on that? If not, we can we can move on. But
Yeah,
just
yeah,
curious.
yeah. I do. I don't think investments in cryptocurrencies are a hedge at all. I think they're an anti-dollar trade. However, the biggest difference between gold and silver and cryptocurrencies is this. Gold and silver hold value. Crypto does not. Crypto can go to zero. If we look at some of the wild fluctuations in price, but it's a piece of paper. Well, I hazard to say that, but in any event, gold and silver hold value. They increase in value over time with the cost of living. They face no credit risks. They're real physical, tangible things. Crypto is not a hedge against what's happening. Crypto may be a great way to get rich, but I think it's an anti-dollar trade. I wouldn't consider it a hedge against the falling dollar.
Yeah, thanks, Sean. I think that's a good point. I probably used the wrong terminology. Maybe, like I said, it's an alternative to the dollar. I think is how people look at it. Maybe that's somewhat of the similarity, but like you said, I think that's the thing that crypto doesn't have is certainly the history that the gold and silver do. So that's it remains to be seen ultimately if things normalize at some point. But I think
Yeah,
definitely some excellent points there
could be a
in
great
that.
investment
So
too. Could be a great investment too. I realize I sounded perhaps a little bit cold water on it, but you're talking to a gold and silver man.
yeah, no, absolutely no, understand completely. So Joe, as we conclude here, certainly, I mean, anyone has any other questions, get them typed in now. But kind of again, how can people get a hold of you if they want some more information on how to buy gold and silver? Or actually, well, before I go into that, we actually had a question pop up. So it said you showed a 25% optimal portfolio content for gold. Is that really for precious metals? So it could be like combined gold and silver, or is it 25% specifically for gold as that 25% number you were talking about?
No, I think that 25% is just an example of a rebalanced portfolio. I think within that 25%, you want to have a little bit of both. I would suggest that that's a conversation that you need to have with yourself and decide what's best. The reason I didn't highlight one metal or the other is because gold and silver, while they both hold value and they trade in tandem, they're gold typically is the crisis commodity. Silver tends to be a little bit more volatile. And of course, age, income, net worth, these are all considerations when you're looking at how much of that 25% is going to be gold and silver. But that's going to be a personal mix that you've got, that we can discuss. And we'll help you, obviously, and you'll make the decision that's right for you. But the 25% could be composed of any or all of the precious metals.
Okay, so thank you very much, Joe. Someone asks us now, what's Advanta's annual IRA fee? I can tell you for our annual fee to hold metals in your account, it's a flat $100 fee for us to act as a custodian holding the precious metals. And then other than that, there's I think there's a small transaction fee of $35 to buy the metals. But in addition for the annual fee, the $100 flat fee for us to hold precious metals, there's also, like I said, you're then going to have the storage fee, which is, as Joe mentioned, for IDS, is the 10 basis points. If you're using a different storage facility for whatever reason, they might have their own storage fees, some of them around 125, 150 bucks a year as well. So it's kind of that's what our annual fees are for holding the metals. And again, it doesn't matter if that's gold and silver; it's just a flat $100 fee to hold those metals. Joe, again, how can people, so I was getting started to get to it, how can people get a hold of you? Any additional questions they have on the process of buying the metals, or just want some more information on Allen House, or some of the things you covered today? What's the best way for them to get a hold of you?
So the best way to get a hold of us is just to go to our website, allenhousemetals.com, call the number that you see on the screen there, 561-284-6443, and importantly, reference the Advanta IRA webinar, and we'll honor a significant discount for you. There's zero pressure at all. Today's webinar, of course, was for educational purposes, and Scott, again, I want to thank you on behalf of Allen House Metals for having me. If all you're looking for is information, questions, please give us a call. We don't offer investment advice, but we certainly want to make things easy for you, and nothing's easier than the arrangement that Allen House Metals has with Dillon Gage, IDS, and Advanta IRA. And again, I thank you for having me, Scott.
Okay, yeah, definitely. Joe, thank you again for coming on. Really appreciate that. And being a part and sharing the information today, and certainly those individuals who have additional questions for us, please don't hesitate to reach out to us on the IRA side. Reach out to Joe with questions you have on the precious metals purchase side. So Joe, again, thank you very much for your time. Hopefully it's been great, very educational event for everyone who's attended. I certainly learned a lot. So thank you again for coming on.
Thank you.
All right, yeah, and for all the attendees again, we'll look forward to having you and seeing you on our next webinar. Or again, if you wanted to review a recording of this and you were listening live, you can check our YouTube page in a day or so as well. So this time, thank you very much to everybody who attended and participated, and we'll see you later.